Something strange is happening in the silver market, and most people are not paying attention. While the world is focused on artificial intelligence, technology stocks, and the next big trend, some of the most experienced investors on the planet are quietly moving in a completely different direction. They are buying silver not because of hype, not because of a short-term gamble, but because they believe something much bigger could be developing behind the scenes. When investors with decades of experience and billions of dollars start positioning themselves, it usually means they are seeing a pattern that the average person has not noticed yet. The question is simple. What do they know that the rest of the market is missing? Over the last few years, several major investors have increased their exposure to precious metals, especially silver. These are not ordinary traders chasing online trends. These are people who study markets, analyze global events, and look for opportunities before they become obvious. One of the biggest names connected to silver is a legendary resource investor who has spent decades studying precious metals. Unlike many investors who simply add a small amount of metals to their portfolio, his approach has been much more aggressive. His belief is that silver could be one of the most undervalued assets in the world, and his reasoning is not based on emotion. It is based on supply, demand, and the changing structure of the global economy. Silver is different from gold because it has two important roles. First, it has been used as a store of value for thousands of years. But second, it is also an important industrial metal. Modern technology depends on silver. Solar panels, electric vehicles, electronics, and advanced manufacturing all require silver. As these industries continue to expand, demand for this metal keeps increasing. The problem is that supply is struggling to keep up. Many silver mines are becoming harder and more expensive to operate. New discoveries are becoming less common and bringing new production online takes years. This creates a situation where demand could continue rising while supply remains limited. And that is exactly the type of imbalance that can create major price movements. But the silver story is not only about industry. Another major factor is the global financial system. Some of the world's biggest investors have been warning for years about rising debt levels, currency pressure, and the long-term effects of money printing. Their argument is simple. Governments can create more currency, but they cannot create more physical assets. When confidence in currencies weakens, investors often look toward assets that have survived for centuries. Gold has always been the obvious choice, but silver has an extra advantage. It is not just a financial asset. It is also a critical material for the modern economy. That combination makes silver unique. Now, another interesting name connected to this story is a famous investor known for predicting major market problems before they happen. His strategy has always been different. He does not follow the crowd. He studies data, looks for weaknesses in the system, and makes moves before everyone else understands what is happening. Over the years, his investment decisions have often looked unusual at first. But when the market finally catches up, those decisions sometimes become obvious in hindsight. And right now, his focus on commodities and precious metals has caught attention. 3 different types of investors, 3 different strategies, yet they are all looking at the same thing: a possible shift in the financial environment. Because when experienced investors from completely different backgrounds arrive at a similar conclusion, it raises an important question. Is silver simply another market story, or is something bigger happening? The answer may come down to one major factor: supply and demand. Because unlike many assets, silver has a growing industrial need while available supply remains under pressure. And if demand continues increasing while production struggles, the market could face a serious shortage. That is the reason some investors are preparing early. They are not waiting for headlines. They are positioning before the crowd notices. The interesting thing about major market moves is that they usually do not start when everyone is talking about them. They start quietly, before the headlines, before the excitement, before The average investor even notices. That is exactly why some people are watching silver so closely right now. Large investors rarely buy everything at once. They usually build positions slowly over time. They accumulate when prices are ignored. They buy when the public is distracted. And they wait until the market finally recognizes what they saw earlier. This pattern has happened many times before major moves in commodities. The early signs often appear in the same way. Low attention, low excitement, and quiet buying from experienced investors. Silver is currently sitting in an unusual position because it has both an industrial demand story and a financial protection story. The industrial side is growing because the world is changing. The push toward renewable energy, electric vehicles, and advanced technology requires more materials than ever before, and silver plays a role in many of these technologies. Every year, more industries compete for the same limited supply, but mining silver is not as simple as increasing production overnight. A new mine can take years before it starts producing. That means even if demand suddenly increases, supply cannot immediately respond. This creates pressure. And when markets face pressure between limited supply and increasing demand, prices can react quickly. But there is another side of this story that many people overlook. Silver is also connected to the global financial system around the world. Debt levels have continued increasing. Governments have borrowed heavily. Central banks have injected huge amounts of liquidity into economies. And throughout history, whenever confidence in currencies weakens, investors usually look for something real, something that cannot simply be created with a computer. Physical assets, precious metals. Resources. This does not mean every financial problem automatically sends silver higher. Markets are complicated, but history shows that during periods of uncertainty, hard assets often become more attractive, and silver has an interesting advantage. Gold mainly plays the role of a monetary asset. Silver plays both roles. It can act as a store of value, but it is also needed for real-world production. That combination is what makes the silver market so interesting. Another important point is that much of the available silver supply is not sitting in a giant warehouse waiting to be sold. A large amount is already being used in industrial applications. Small amounts of silver are built into countless products around the world. Once used, recovering that silver is often too expensive or impossible. So the supply that is easily available can become tighter over time. And that is where investors start asking a bigger question. What happens if demand keeps rising, but available supply starts shrinking? Because when markets become tight, small changes can create huge reactions. A little extra demand can suddenly have a much bigger impact. This is why some investors are not looking at silver as a short-term trade. They are looking at it as a long-term position. They believe the market may eventually have to adjust to the new reality. And if that adjustment happens, it may happen quickly because markets usually move slowly until they don single quotes T. One of the biggest mistakes investors make is waiting until everyone agrees. By the time a story becomes popular, the biggest opportunity is often already gone. The people who profit the most from major trends are usually the ones who notice the shift before it became obvious. That does not mean every prediction is correct. Even experienced investors can be wrong. But when several successful investors from different backgrounds start preparing for a similar scenario, it deserves attention. A resource expert sees supply problems, a macro investor sees currency risks, a contrarian investor sees a market being ignored. Different viewpoints. Same destination. Silver. And this is where the bigger picture becomes interesting. Because if the market is truly entering a period where physical resources become more valuable, silver could become one of the assets caught between two powerful forces: growing demand and limited supply, the next few years could reveal whether these investors identified a major opportunity early, or whether the market was simply overestimating the situation. But one thing is clear: something is changing. The world is using more silver than before. The financial system is facing more pressure than before. And investors who study these trends are watching closely. The question is not whether silver is guaranteed to rise. Nothing in markets is guaranteed. The real question is, are people ignoring a major shift before it becomes impossible to ignore? For decades, the biggest market opportunities were rarely found where everyone was looking. They were found in the places people ignored. While the crowd followed trends, the smartest investors studied what was happening underneath the surface. And right now, silver is sitting in that exact position. It is not the most popular asset. It is not dominating financial news. Most people are not talking about it. But behind the scenes, the fundamentals are changing. Industrial demand continues to grow. Supply challenges continue to develop. And some of the most experienced investors in the world are paying attention. Maybe they are early. Maybe the market needs more time. Or maybe they are seeing the beginning of a major shift before everyone else. Only time will reveal the answer. But history has shown one thing again and again. When markets finally recognize a major change, they usually move much faster than people expect. The biggest question is not whether silver can move higher. The bigger question is, will people notice the opportunity before the market forces them to notice? Because by the time everyone is talking about something, the early investors are usually already there. So keep watching, follow the data, ignore the noise, and always ask yourself, what is the market missing right now?